The things that happened after the inauguration of the current administration is Biden decided that, hey, we're going to reverse a lot of what Trump was doing. And one of the first things they did was relative to the gas and oil industry. So let's take a look at the gas prices from, going back in time to today. So the gas trends, the price trends in 2021, you can see back in January 2021, the gas prices were down to $2.16 a gallon. That was January 4th. And you can see there was a steady rise in gas prices. And there was a myriad of regulations that went into play at that point that were actually pushing gas prices up. When you think about it, many of the news anchors are talking about the reason why gas prices are high. Some of them are saying, hey, it's Putin and it's war. Yeah, we're not really exporting that much from Putin to influence our gas prices that much. However, we are exporting more now than we have in years. Mm-hmm. But the other one is, the administration's talking about why are the oil companies gouging, and hey, you big bad oil companies, you need to get in line here and lower your prices. But here's the interesting thing. When you look at the chart that we have up there right now, this is from Fred, which is from the stlouisfeds.org website, and they chart a lot of statistics. And this chart really looks at the crude oil prices going back to 2008 all the way up to today. And back in 2008 during the recession, you can see we had really high oil prices at that point. And if many of you remember, the gas prices were right around $4 a gallon. Then the prices came down 2009 and steadily went back up from 2011 to end of 2015. At that point, what happened? Well, Trump came into office and he made some regulations that kind of made it a little bit easier for oil companies. And you had oil prices come down for a while. And there was something interesting, and I don't think this caught too much news, but in March of 2020, President Trump purchased a lot of oil at a discount to fill up our strategic petroleum reserves. Now, why is that important? Well, from a business standpoint, if you see something you're going to need in the future and it's at a very low discounted price, good time to buy it, stock up your shelves for the rainy day, right? So that's what he did. Now, as you can see in this chart, the oil prices started steadily going up from 2021, January 2021 and on. And they got pretty darn high from an oil price. But the question is the oil prices today, the cost per barrel, the only reason why prices are high? And I think we're going to find that that might not be the case. Again, the prices that were for oil today is not that much different than it was going back from, we'll call it 2008 to 2015. But yet the prices in the past were lower than they are today. So let's go forward. Now, this chart shows the conventional gas price over the same time period. So you can see in 2008, when oil prices were really the highest, the gas prices were just hitting the $4 range. And then you look at the 2011 to 2015, which is close to where we are today. You can see at that point the prices were under $4 a gallon, really somewhere between $3.25 and $3.79. But when you take that red line and move over all the way to the right, you can see prices today on gas kind of should be a little bit lower than where we are today. And I'm sure people are feeling the pinch at the gas pump. I don't know about you, Rocky. I filled up last week, and it was over $100 to fill up my tank. So pretty expensive out there right now. Actually, I filled up one time, and it was $120 to fill up my tank, and that was about a week and a half ago, before we saw the prices come down.
I've never paid that. Because I don't wait till I'm empty to fill up, because I don't want to have those big bills. But it costs the same. I guess that's the point.
Yes, it does. Yes, it does. So you can see that on the right-hand side that the prices have come down. Now, why did that happen? Well, it happened because the current administration, going back to the strategic oil reserves, have released over, 60 million barrels or 60 billion barrels?
A lot.
But a large portion. Matter of fact, everything that was purchased back when Trump bought it at a discount was released at this point. Now, some might ask, and I've actually had clients look at me and say, well, why would we do that? I mean, I understand I want lower gas prices, but why would we use up our reserves when we've got so much we could use of our own? Mm-hmm. And I liken it to a person who's got this great paying salary job, and they're working hard, they build up all this reserve money for a rainy day, and then one day they say, well, I've got a year's worth of income there, I'm just going to stop working. And then they start using up all their reserves until they don't have anything left. Well, most people would say that's probably not a smart thing to do. Mm-hmm. So, using reserves when you have the ability to bring the oil in, it's probably a questionable move. But it did bring down prices. Let's kind of move forward. So when you fast forward to the high price range, June 4th, we were at $4.84 a gallon. And if you were buying diesel, which many of you know that Jen and I had bought some property to build a ranch, and I'm buying diesel now for the first time, and I was paying $5.60, $5.90 a gallon for diesel, which is crazy. Now, because the oil reserves were liquidated to a degree, the price has come down to $4.19. Now, it's funny because we get conditioned, right? And we're like, oh, it's down to $4.19, let's fill up. But that's still way higher than it was January when it was in the low $2 range. Right. One of the things, when you're looking at those prices, let's talk about imports and exports of oil. So the U.S. imported 7.34 million barrels of crude oil a day last week. I mean, that's a lot of oil to be importing. And it was up by over 1.1 million barrels the previous week. So we're actually importing more, which means we're paying other people to produce our gas. And then conversely, we had our crude oil that we export reduced by $1 million a barrel. And there's some reasons why that is going on right now. There is a decrease of production in the U.S. oil market. When we talk about inflation, we've got a chart here that shows 2020, 2021, and 2022. And it shows you the monthly inflation rate that was existing during those time periods. And again, let's go back to January 2021, where inflation was at 1.4% for that month. And you can see the inflation was steadily increasing. That's kind of interesting as you're watching it, because you're saying, well, why suddenly did it go up like that when it wasn't going up before? Well, it comes back to administrative policy again. Let's take a look at the correlation between the average price of gas and inflation. And you can see when we overlay that same inflation, you can see that as gas prices were going up, so too was inflation. Why is that? People now, I mean, goodness gracious, you don't even go to the store, but you've got trucks delivering things to you all the time. let's go through a little bit of a timeline here. So in January, again, prices were pretty low. The average gallon on January 18th was $2.37 a gallon. What's one of the first things that Biden did, and that was he canceled the Keystone XL pipeline. And if you know anything about the pipeline, it runs from Canada, goes east, and then back south through the US, and then back west to Texas. And the Keystone XL was going to literally go kitty corner from Canada down, and it was going to cut off a lot of mileage, I guess you would say, relative to getting the gas to Texas. And the additional thing was the pipeline was supposed to produce over 880 million barrels a day. That would have made us 100% energy independent, and it could have fed many other countries with much cheaper oil, and they wouldn't be reliant on Russia, Venezuela, OPEC as a whole. So it actually was good for the world, not just the US. February 26, Biden updates the social cost of greenhouse gas emissions, and this dramatically is altering the way the US government calculates the real world cost of climate change. Now, we'll come back to that because that's going to get into a cost for oil and gas that is going to create expenses for the industry. May 17th, now we're at $3.02 a gallon. August 11th, Biden calls on OPEC to producers to increase oil supplies to help curb rising oil prices. Well, the problem there is they just kind of thumbed their nose up at us and said, hey, you're creating this problem. Why do you want us to fix it? So they effectively have done nothing to support the administration. October 18th, 2021, average gallon now $3.32, so you can see rising up. November 17, Biden sent a letter to the Federal Trade Commission Chair Lina Khan encouraging an investigation into oil and gas companies and retail gas prices. The move absolutely infuriated the oil executives. Why? Well, first of all, shutting down the Keystone reduced the production of oil by 25%. So could you imagine if you cut your income by 25%? How happy would you be? It didn't make the oil executives happy. And then they started going to someone else to try to produce the oil when they knew they could produce it through our industry. Again, didn't really make them happy. So they felt like there is now a war on the oil industry. So move forward. February 2021, now we're at $3.53 a gallon. March 14th, we're in the $4 range. On the 21st, Biden Security and Exchange Commission proposed landmark climate rules. You say the SEC, what does that have to do with oil and gas? Well, when you're trying to move people out of oil and gas, you're also trying to move away from what funds oil and gas. So basically, the administration said to the oil company, hey, we're going to cut off your money supply, or at least weaken it. Well, again, that didn't go over too well with the oil companies. October 29th, Biden and the Democrats propose a methane fee in the proposed budget bill. Well, this goes back to the emissions. This fee would start at $9 per ton in 2023 and increase to $1,500 a ton in 2025. Let's go back to business again. When your business costs go up, do you always eat the cost, or does it get passed on to the consumer? It's getting passed on to the consumer. So you're seeing a trend here of why gas prices are going up and why there's so much inflation. Now let's do the height. June 2022 on the 14th, the average price hit a high of $4.79 a gallon. You can really kind of see the trend. It's not Russia, it's not the war over there that's causing the gas prices to be high. It's literally a war on the oil industry. So it's something that, when you think about it, it's actually a fixable problem. And I've said this before, when it comes to really coming up with a good renewable energy, I think we need to do it. I think it's something that long term is very good for everybody. But it's the method, it's the way we're going about doing it that seems to be causing turmoil, not only for the oil company, but it's being passed on to us at the same time.
Right. And it's the timing of it. It's moving along pretty fast, so.
Well, you're right. It is moving very fast. If you think about it, this has been happening in basically a year and a half. These things have been going on. And there doesn't seem to be any end in sight. I think if I had any recommendations, I would recommend to the current administration to kind of put a moratorium on it. You know, let's get stabilized a little bit and then give incentives to these companies to really go after the renewable energy. And, you know, there's enough money in the oil industry to be able to do that if they're not being regulated and taxed to death at the same time.
Yep. So,
all right.
Good coverage on that.